Bitcoin is rewriting a corporate playbook in 2025, and this time it's not just hype. With Bitcoin smashing fresh all-time highs, more companies than ever are stacking Bitcoin in the balance sheets. What started as a bold move by Strategy, formerly MicroStrategy, back in 2020 has become a full-blown movement. As of June 2025, 151 public companies now hold Bitcoin as part of their treasury strategy, a 135% surge from last year. Together, public firms control over 725,000 Bitcoins, valued at more than $77 billion and representing nearly 3.7% of Bitcoin's total supply. Add in private companies and corporate holdings likely exceed 1 million Bitcoins, enough to rival some sovereign nations. So why the rush? A mix of regulatory clarity, new accounting rules, and a relentless search for inflation hedges, the Financial Accounting Standards Board now lets companies report Bitcoin at fair market value, making it easier for CFOs to justify big crypto buys. A friendlier US policy and endorsements from high-profile CEOs have only fueled this trend. The result? The rise of Bitcoin proxies. These are companies like Strategy, Marathon Digital, Metaplanet, and even Tesla, whose stock prices now move almost tick for tick with Bitcoin itself. For investors, these stocks offer a high-octane way to play the crypto boom without actually holding digital wallets. In fact, Strategy alone holds 580,000 Bitcoins, more than most countries. But there's a razor-thin line between brilliance and recklessness. Bitcoin's volatility is legendary. Corporate treasuries loaded with BTC can see wild swings in earnings, and if companies finance their Bitcoin buys with debt or new stock, they risk capital erosion. That's when raising more money to buy Bitcoin starts to dilute shareholders instead of creating value, especially if the stock price sinks to the company's net asset value. Semler Scientific is a cautionary tale. Despite Bitcoin's price climbing, its stock crashed over 45% this year as the market lost faith in the Bitcoin-heavy strategy. The risks don't stop there. Extreme Bitcoin crashes, systematic shocks in crypto markets, and behavioral pitfalls like overconfidence and herd mentality can turn a treasury strategy into a disaster. Companies that fail to stress test their holdings or ignore the lessons of past market meltdowns, for example Lehman Brothers in 2008 or Grayscale's GPTC discount collapse, could face lasting damage. Still, today, the upside could be massive. Strategy stock trades at a premium to its Bitcoin holdings, and if BTC keeps climbing, these proxy stocks could outperform the coin itself. But the model only works as long as confidence and the premium hold. So the bottom line, Bitcoin on a balance sheet is now a cornerstone of modern corporate finance. But for every headline-making winner, there's a risk of capital erosion or shareholder pain. The next phase of the crypto cycle is unfolding, not just in wallets, but on Wall Street's balance sheets. Watch the charts and the footnotes because the real action is happening in the treasury.